First time home buyers guide, module 4. So in this module, we're going to look at the final factor when qualifying for a mortgage, your down payment. So, let's make sure that there we go. In Canada, our rules around down payments stem from the Anti-Money Laundering Act. So all lenders are required to collect all the necessary documentation for down payments and the origin of the funds used in the home buying process. So in order to satisfy the lender's requirements, you will be required to provide a 90-day history of all the funds that you're using for both your down payment and your closing costs. These statements must show your name, the account number, and cannot be altered in any way. So nothing crossed out, nothing blacked out, anything like that. As well, if there are any large deposits over $2,000 being transferred in or out from any other account, such as savings or investments, you will need to provide an explanation and potentially a 90-day history if they are being transferred back in and out. So a 90-day history means 90-day bank statements from both of the accounts that the money is transferring back and to from. So further, there are rules on where the down payment money can come from. The allowable sources for down payments when buying a home are your own resources, so any non-borrowed savings or investments that's in your personal name. We have gifted down payment, so an immediate family member can gift you a portion of your down payment. Gifted equity, parents can gift equity from their family home to their child when the child purchases the family home. So if you are buying your parents' home, then you can get the gift as equity versus actual cash in hand. And there are other sources that can be sort of equity borrowed from another property or sale proceeds from a previous home or asset. Now, if you're a first-time home buyer, these are probably not sources you're going to have unless one of your family members are doing that for you, and then it would just end up becoming gifted funds from that family member anyways. So now that we know where down payment funds can come from, let's cover the minimum down payment requirements for purchasing a home. Some basic guidelines for minimum down payment are as follows. So we have insured mortgages, and this just means that you're putting less than 20% down payment. All insurers require a minimum of 5% down payment on the first $500,000 of the purchase price, increasing to 10% on any amount above $500,000, but less than $1.5 million. So if you're putting less than 20% down, you will require default or CMHC mortgage insurance. This premium is added to your loan, to your mortgage amount. And the benefits to having an insured mortgage is you get lower interest rates. Actually, you get the lowest interest rates out of everyone else. If you are purchasing a home that exceeds $1.5 million or is a rental or has more than 2 units, you will be required to have a minimum down payment of 20%. Some other scenarios that require 20% or more down payment are if we need to access an alternative lender due to credit or a specific program that's not offered on the prime side. Or the property type can also require a larger down payment, such as a seasonal cottage or raw land. One of the benefits of putting 20% or more down is that you don't require default insurance or mortgage or CMHC insurance. And you can access a longer amortization, like 30 years, thus allowing your mortgage payments to be lower. I would like to also mention that, and it's a new thing that's happened, is that you can access a 30-year amortization on an insured mortgage, so putting less than 20% down, as long as you are a first-time home buyer and buying a new build. So there's that potential. Lastly, Debt servicing ratio, which we talked about in the last module, also plays a key factor in your required down payment. Although the minimum down payment on a home under $500,000 is 5%, you still need to qualify for that minimum amount. You may be required to put additional money down to bring these ratios in line with your ideal purchase price. So, this wraps up Module 4. Up next, we are going to cover different government programs that are available to assist you in qualifying for a mortgage. So that brings us to Module 5. Module 5, we're going to cover two main programs that will assist you in saving for a down payment or purchasing a home. So first, let's focus on the home buyer's plan. This program allows you to withdraw funds from your RRSP to buy or build a new home up to a maximum of $60,000 without having to pay any tax on the amount. And this $60,000, if there's two of you buying together, like a couple or something, each of you can access $60,000 of your RRSP. So some key points of this is that the program allows you up to 15 years to repay the funds. So once you've bought a house, you've used the funds, you have 15 years to pay back whatever you took out. You also need to be the owner of the RRSP. You must be a first-time home buyer, and you must be a resident of Canada at the time of withdrawal. So to use this program, your lender will require you to show a 90-day history of your account where the RRSP is held, a copy of the request to withdraw the funds, and your bank statement showing the funds being deposited into your account. Last but not least, we have the new-ish First Home Savings Account, a new tool that's going to help Canadians save for their first home. So unlike the home buyer's plan, this doesn't need to be paid back. So imagine a savings account that's specifically designed to help you buy your first home. That's exactly what the FHSA is. Your contributions reduce your taxable income, like an RRSP, and the money will grow tax-free like a TFSA. So right now, as I'm recording this, you can contribute up to $8,000 per year with a lifetime limit of $40,000. You can withdraw these funds tax-free whenever you're ready to buy your first home. If you don't use it for a home, you can always roll it into your RRSP or a RIF later on. The First Home Savings Account is truly a game changer for first-time buyers, and it's making it a little bit easier for folks to save up for that big purchase. And this concludes our Module 5 on down payment assistance programs. Up next, we're going to go through closing costs. These are costs outside of your down payment. All right, Module 6. Now that we've covered down payments, we're focusing on these closing costs. Closing costs are various fees and expenses that buyers and sellers incur when purchasing or selling a home. These costs are in addition to the purchase price of the home and separate from your down payment. The specific closing costs can vary based on the location of the property, the type of the property, and the details of the mortgage agreement, but they typically include the following, which we'll get into. So land transfer tax, you can use online calculators to estimate this cost. First-time home buyers can get up to around $4,000 off. If both buyers are first-timers, the savings could be up to $8,000 or more. Another thing to keep in mind is that some municipalities have double the land transfer tax, aka Toronto. We have an Ontario land transfer tax and a Toronto land transfer tax. So if you're buying and selling in Toronto, you have to pay two. We have legal fees. Usually these start at around $1,000 and can increase from there. It kind of typically averages around $2,100 to complete a home purchase for legal fees. Property tax holdback. If the lender is paying your taxes on your behalf, property taxes on your behalf, and you are putting, or you're putting less than 20% down, you may need to pay a portion of the tax upfront into a tax account, which is typically what they'll ask for is around 25% of the annual amount of your property tax. Title insurance. So title insurance is required by every lender. It can range from $400 to $1,100 depending on the purchase price. We also have interest adjustments. So this depends on your mortgage closing date. It's a small amount covering the interest from your closing date until your first full mortgage payment day, just because interest accrues during those 2 days. So during your pre-approval with us, your mortgage agent, hopefully me, will discuss these costs with you, and we can typically estimate them within a few $100s. So you'll know way up front before you even bought a property how much money you're going to need in your account, whether that's or split between how much down payment and how much closing costs will you need in order to buy a home. So if your down payment is less than 20%, I did mention it a little bit earlier. If your down payment is less than 20%, you will be required to show proof of having your own down payment plus an additional 1.5% of the purchase price saved. Lenders will ask for whatever bank account that you have the closing costs in. They will ask for a picture of it to see that you have 1.5% of the purchase price saved specifically for closing costs. So lastly, in addition to closing costs and your down payment, you can expect the following costs when purchasing a home. There is the home inspection fee, we have appraisal fees, utility connections. Sometimes that doesn't cost anything, but it is something to just keep in mind. Utility connection, movers, if you are using a moving company or if you're renting a moving van, that's a part. Purchasing of appliances and furniture. If you've never owned a home, if you've never lived on your own, you probably don't have furniture to fill that home with. So these are costs that will come after during and after. So this concludes Module 6. Up next, we are going to conclude this series with a run through of the whole mortgage process from start to finish. Let's go. Module 7. So this is a wrap-up module. We're going to journey through the entire home buying process from start to finish. As we've discussed in previous modules, preparation is key and is step 1. This includes gathering financial documents, knowing your credit score, understanding your budget with a pre-approval. We're going to review your income, your credit, down payment in our initial meeting, and understanding what you can qualify for and what fits your budget so that you can shop for a home with confidence. We'll also start securing rate holds to protect you against interest rate increases and discuss the best mortgage products for your specific situation. So before you start house hunting, remember the pre-approval do's and don'ts. Do not exceed your pre-approved amount. Don't try to buy something more than what we tell you you can afford. Avoid large purchases that are going to affect your debt to income ratio. So buying things from the brick on layaway or buying a car that's on layaway. Don't do that. or a car loan. Refrain from new credit applications. So don't sign up for a new credit card. Don't go get a line of credit. Just don't do that. Don't change jobs, as this will impact your approval. Extremely will impact your approval. Do not change jobs. Lastly, keep paying your bills on time to protect your credit and your maximum mortgage amount. So we'll move on to step 2. We got house hunting with your pre-approval. Your realtor is going to guide you to homes within your budget. So they're going to check the home structure, surrounding land for any issues. They'll evaluate the home's value, considering its condition, location, and market demand to ensure you don't overpay, and will negotiate the best deal for you. So when you find your ideal home, your realtor will help you make an offer, explaining the importance of including specific conditions for protection. So expect some negotiation to get the best price and terms. Patience is very important during this part of the process. When making an offer on a home, you can include several conditions to protect yourself. Some of these we highly suggest. Financing condition. Even if you're pre-approved, this condition allows you to finalize that mortgage approval based on your income, credit, down payment, and the property, and especially the property. Home inspection condition. This lets a home inspector check the property for issues like mold, foundational problems, and future repair needs. Appraisal conditions. If your down payment is over 20%, an appraisal is needed to assess the home's value. If the appraisal value is lower than your offer, you might actually need to increase your down payment. Condo document review. If buying a condo, if you're buying a condo, a lawyer should review the condo documents to identify any potential issues that could affect lending or increase your condo fees in the future. These are the main conditions, and your realtor can add more as needed to protect your interests. Number 3, after your offer has been accepted, we're at mortgage approval. We're going to submit your application to the lender and finalize your mortgage details, including the rate type, term, down payment, and closing costs. Lenders usually will decide within 24 to 48 hours, and most likely will ask for more documents related to income, down payment, closing costs, possibly an appraisal, which we all will arrange. Once your home inspection, appraisal, and legal reviews are completed and all the mortgage requirements are met, you can confidently waive all conditions. This step is known as firming up, which legally commits you to the property. The final step, sorry, my nose is so itchy right now. I think my cat was by. Step 4. This final step, step 4, involves your lawyer completing the lender's solicitor conditions. They will collect your down payment and closing costs, complete a title search, ensure you have home insurance, and they'll also review your mortgage documents with you to ensure that you have a clear understanding, and they will assist you up until closing day. So, once all your documents are signed and the title is transferred, you officially own your home. Congratulations! This marks the start of an exciting journey in your new home. And you will have many transactions throughout your life. And hopefully we, your mortgage agents, will be there to help you through them all. We'll continue to guide you on your next purchase, equity takeouts, renewals, and much more. And that's it. You've navigated the journey from pre-approval to home ownership. And we wanted to just say thank you for participating and watching this series. Of course, follow us on Instagram. I think we're also on TikTok at this point. And feel free to reach out if you want to move forward in being a first-time home buyer. All right. Bye.